Hello guys, welcome back. In today's video, we're going to be looking at a simple and profitable top-down analysis trading strategy. And in order to get the best entry, the best win rate, and the best risk to reward ratio, you need to know how to use multiple time frames. And in this video, I'm going to be teaching you everything you need to know about top-down analysis. This is what you're going to learn in this video about top-down analysis. What is top-down analysis? Why look at multiple time frames instead of one? How to trade using multiple time frames? My high win rate top-down analysis trading strategy. If you can master top-down analysis, you can get the best entries, the best risk to reward ratio, and the tightest stop loss. Okay, so mastering top-down analysis is going to maximize your win rate, okay, maximize your risk to reward ratio, and give you consistent profit. So what is top-down analysis? Top-down analysis starts from the higher time frame down to a lower time frame. It provides a holistic view about the market. It gives us the general picture of the overall trend. Okay, it's a comprehensive approach used by traders to analyze the market from multiple time frames, providing an overall view of the market trend so that traders can make an informed trading decisions that aligns with the overall trend from different time frames. Okay, so why look at multiple time frames instead of one? Okay, so looking at this chart, okay, as you can clearly see, this market is actually telling you that this is what is sell trend. All right, so because why? Because you can clearly see your low, your high, your low, your high. All right, so imagine you just woke up in the morning and then the first thing you did is jump to the chart, and then you open the chart and you see this. You can clearly see that this is a downtrend. Okay, and then you decide to take a sell here. All right, and then probably you decide to take your targets right there, deep down there, deep down. Yeah, you decide to target that area. So what happens? All right, because you are not in alignment with the trend, you're going to get what stopped out. All right, because this market is in an uptrend, it's just in a corrective phase, trying to grab liquidity from sellers. Okay, so now let's go to the 4 hours time frame on this chart so that you can clearly see a bigger picture of it. So now looking at the 4 hours time frame, you can see that this market is actually in an uptrend. Okay, and I don't want to be having anything to do with this market right now until probably it pulls back to a certain key level where I'll be comfortable and confident enough to actually take a trade. Otherwise, I don't want to actually be participating in this market. Although I agree with the fact that, okay, this market is actually at the supply level, but I don't want to actually be taking my sales just yet because the market can actually do funny things. You understand? So looking at this now, you can clearly identify that we have a high, we have a low, and then we have a high, we have a low, we have a high, a low, and seemingly this can just be what? Another what? High and then low. So if I must participate in this market, I'll wait for it to actually come to a key level, then I take the buys up to the upside. So looking at multiple time frame analysis, it actually what helps us to have a clearer picture of the overall trend and then look for optimal entry point. For optimal entry points, I'm just going to use my gold trade, which I actually took last week, to actually show you something. All right, so now let's look at gold setup. Okay, imagine now that you decided to actually sell gold or buy gold from just looking at the chart, okay, without multiple time frame analysis. Let's say you decide to sell here. Sorry, that's a buy to which I brought up. Let's say you decide to sell gold here, all right, and then your stop loss just there, all right, and then probably your target. You can't be scared that this market is actually going to take you out. Okay, why? Because you are not doing the right thing. If you are using multiple time frame analysis, you'll be able to narrow down things, okay, and then get optimal entry. So let me show you my approach, which I will use to actually enter this trade and actually have a better win to reward ratio and even smash my take profit target. So now I'm just going to go ahead and delete this. Okay, from the high time frame, we can clearly see that this market is an uptrend. So if I'm going to go for a sell, I'm actually going to be going for short-term sells, and I'm going to actually be targeting the swing lows. Okay, all right, swing lows, the short-term trend. Okay, now going to the 1 hour time frame. Going to the 1 hour time frame, I can actually start building a story, but because here we have the market pushing to the upside. Okay, we have the market pushing to the upside. We have a high, we have a low, okay, and then the market pushed to the upside. All right, we have a low here now. All right, so that we have a story already. All right, we have a story already. So but that story is not complete yet. So what I have to do now is I have to step down to a lower time frame, like the 15 minutes. All right, I have to step down to a lower time frame like the 15 minutes and actually look for a setup and try to build a story here. All right, so right here I told you guys that already we have a pullback, okay, corrective phase, and expecting the market to push upward. And then here I have a fair value gap. Okay, I have a fair value gap, but that is none of my business. Okay, I have a fair value gap, but it's none of my business. Okay, so another thing here is I want you guys to pay attention to this price movement. We have a low, and then now we have a high, we have a pullback, we have a high again, and then what happened? The market came, pull back to this demand area, okay, because this actually becomes what a demand area, okay, after the market has actually make another high. Market pull back to this demand area right here, okay, and then push to the upside. So because the market pushed into a demand area, there are a lot of people actually buying from this area. Okay, we have buyers here. All right, so right here you can clearly see that we have what a sweep of what liquidity. Okay, we have a sweep of liquidity. Why? Because there are some sellers right above that area, people trying to actually short this market to the downside. Okay, so those sellers have actually been taken out. Okay, they are cleared. So see what the funny thing the market actually did, because I'm actually waiting for the market to show me what to do. Understand? I have a set of things which I'm actually looking for. I want the market to actually bring those things. So we have what a break of structure here to the downside. So this break of structure, what does it mean? It means that the sellers have been liquidated. The buyers, those people who bought and actually aiming to target this area, have also been liquidated. So therefore we have a break of structure. All right, and we have a pullback. After the break of structure, we have what a pullback, which is, if you take your Fibonacci from the swing high to the swing low, you see that it's actually more than a few points above what 50%, which is valid for my structural liquidity. All right, so this becomes what my structural liquidity, and then we have our second what break of what structure right here. So we have our sweep of liquidity, we have a first break of structure, we have a pullback to provide what structural liquidity, okay, which you can clearly see right here. So and then here what we have our second break of structure, and then here we have our protected low, and then here we have our protected high. So the next thing to look out for now to mark is what your POI. So looking to the left here, I can't see any significant candle, okay, but rather here there are powerful candlestick patterns. There is an engulfing candlestick patterns, all those other candlestick confirmation. Okay, so that becomes our POI. Our POI is mainly like a supply zone, okay, where we're actually looking to take sales from. So the market now, what happens after the market created this low? What happens? You wait for the market to actually come sweep this high right here. So when it takes out this high, okay, that's your structural liquidity. Why? Because there are some persons that actually traded this break and retest, and they're actually aiming for the break and retest, and they're actually aiming for the dip of the earth. Okay, but the market doesn't operate like that. Okay, the market wants to actually grab liquidity. If the market actually operated the way I just showed you guys, everybody will be a billionaire. So what happened? The market came, swept the liquidity that's on the line in that area, and then tapped into our POI, and then give us what? A confirmation candle. Okay, the 15 minutes, which is the micro time frame, gives us what? Confirmation. So right here you have a confirmation, and then you take your trade, and then your stop loss just slightly above. So this scenario now gives us what? An optimal entry point. Okay, so you entered right there, and then you target this area. Not only that the strategy provides a target, but also if you want to check and evaluate things precisely, this area is more like a blind spot. So this strategy, why you need to look at multiple time frame is, one, it gives you a clearer picture. Two, look for optimal entry point, and then check for blind spot. So this area here is more like a blind spot. Okay, it's more like a blind spot. Why? Because it's more or less like there is a demand level in this particular area, and then there is a tendency for the market to actually hit this area and then keep going back to the upside. But what happened? So therefore you set your target at that area. Okay, so you see the market actually just smashed that area, and we have a nice 1:5 risk to reward ratio. And then you can actually decide to extend your targets, okay, which is still allowed. So you decide to extend your target. So what happened? After a few points happened, the market actually reversed, taking out that high. So that is the reason why you need to actually look at the multiple time frames to actually do your analysis, to optimize your entry, and then check for blind spot to actually know the precise level in which you need to set your stop loss and then your target. Okay, to trade, how do we trade using the multiple time frames analysis? Okay, the high time frame gives us the market direction. The lower time frame is used for analysis. The micro time frame are actually for entry. Basically, top-down analysis is actually looking for the market from the higher time frame, the lower time frame, and then the macro time frame. The higher time frame precisely is basically the weekly time frame and the daily time frame. The weekly time frame we use to identify what the overall direction of the market, and then find major key levels, and then identify recent swing highs and lows. So with that, now we're just going to look at the gold chart on the daily time frame. Let's look at the overall trend of this market. Okay, from the daily time frame perspective, you can actually see that this market is actually trading toward the upside. Okay, why? Because we have our swing highs and lows in that particular manner. We have a high, we have a low, we have a high, we have a low. So, but within this internal structure, we still have highs and lows. So within this internal structure, we still have highs and lows, we still have another high, we still have low, just like that. So, but if you scale down to a 4 hours time frame, you'll be able to identify what the market precisely. So therefore, top-down analysis is more like a chain, and no one specific time frame has the general power. Okay, they work relatively, you understand? So finding the major key levels in the market, so we have already identified the trend of the market. So the major key levels for this particular market is, we have this area to be a very strong level, and then this area too has to be what? A very strong level. All right, but basically I don't try to focus on too far away points. I rather prefer to focus on what? The recent swing highs and low. So we have the recent swing low and then the recent swing high. So basically the market is more like trading in what? A range. So after identifying the daily time frame or the higher time frame, swing high and low, you step down to the lower time frame. What are you going to be looking for on the lower time frame? On the lower time frame, you're going to scan for trading opportunities, scan for supply and demand zones, order blocks, market structure, Fibonacci, and then trend lines. Okay, already you can actually use your trend lines to actually identify that, okay, this market is actually heading to the upside with whatever strategy you're actually using. For me, I just need to actually identify the swing high and the swing low, and then step to the 4 hours time frame to actually identify the short time frame structure of the market. So we have the market being at the swing low and then the swing high. So basically the market is actually trading between these two key levels, but the overall direction of this market is to the upside. Okay, because if you actually analyze, we have a high. If you actually analyze this, we have a high, we have a low. So basically the market can actually just keep pushing to the upside. Okay, so but if you scale down to the smaller time frame, you'll be able to have an idea of the lower time frame trend, you understand, and then you can actually just focus on just scalping the market with respect to the lower time frame trend, but always having the aim at the back of your head that okay, this market is actually an uptrend, you understand, because if you have the general view of the market, the bigger picture, you'll be able to know where to set your target precisely, you understand. So now I've actually identified this level, okay, and then my blind spot for this market is this. All right, the blind spot is actually going to be this area. So you can clearly see that this market actually respected this area numerous. It has actually respected this area and reacted to it numerous times. So I can go down to the 1 hour time frame and just try to identify what's up with the market around that area. So you have here, we have here, we have here, and then we have the market reacting to this level respectively. So mainly that's our blind spot in the market. So I'm just going to go ahead and return this right here. So we have our blind spot knocked out. All right, so here you can clearly see that mostly that's like a supply zone. So the market just tapped into it, and then if I scale onto the 15 minutes, I can actually identify something else. Okay, on the 15 minutes, I can clearly see that there is actually a sweep of that high. Okay, so in that case, the market actually failed to keep going, forming high highs and high lows. Okay, so I'm just going to adjust this a little bit. All right, so the market stopped forming high highs and high lows. So that shows what weakness of momentum. And then you can clearly see that this is a high, and then this is a low, this is a high, and then this is actually supposed to continue pushing to the upside. But then the market actually failed to do that. That indicates what weakness, okay, and then slowness in momentum, which can actually lead to a short-term trend. Okay, so now on the 15 minutes, this is on the 15 minutes chart, we can clearly see that this market has actually failed to break that structure to the upside. So therefore, we have a low, we have a low, we have a lower high, we have a lower low, we have a lower high, and then just like that. So you have already identified the short-term trend now, but having in mind the higher time frame structure, okay, the bigger picture, which is the market's uptrend, okay, saves you from a lot of trouble. Okay, so right here we have what? A sweep. We have a sweep of what? Liquidity. We have a sweep of liquidity around this area. Okay, so the market created a low, created a high, taking out all the sellers who are actually within that area. Take out all the sellers, and then we have what? A break of structure to the downside. So after this break of structure, what do we have? We have a pullback, and you don't need to use the Fibonacci tool to actually identify that that is up to 50%. Okay, you don't need that. So we have a pullback which is up to 50%. We have our second break of what? Structure. Okay, this is what our second break of structure. We have our protected low, we have our protected high. All right, so and now looking at this area here, there's no significant level which I'm going to draw my POI. So I'm just going to draw it here because there we have a supply zone. Okay, so we have a supply zone. All right, so mainly I just want this market to actually trade back to that area. So for now, I'm just going to sit and actually wait for the market to actually trade to that area, and then I'm going to take my sells from there and then target this low here. All right, target that area before the market. Target that area. Okay, I'm just going to target that area. Okay, and now I can clearly see something here which I never paid attention to previously. We have a sweep of stock. We have a sweep of liquidity here. We have a break of structure. We have a pullback which is up to 50%. We have another break of structure. So we have our protected low here. So are you seeing this? I never saw this one. I'm just seeing this now. So it's more or less like I'm selling to actually buy this market. So I'm just gonna go use a gold color here. I'm just gonna go use a gold color here. So it's more or less like I'm going to sell to buy. You understand? With the overall trend, I'm just going to have a short-term scalp to this area and then buy from here all the way up to the upside with respect to what the overall trend. So guys, don't forget to hit the like button and then subscribe to this YouTube channel for more and more videos like this that will enlighten you about trading. So take care guys. See you guys in my next video.